Let's analyze the stock of Supermicrocomputer. What's going on? It has remained in the range of 70% to 90% recently. I'll definitely show you the volatility smile. Let's look at historical implied volatility as well. I also want to highlight the significant volume of options trading. It's quite concentrated. I'll show you where they might be headed. We'll also touch on 3D volatility. And as usual, I'll present a strategy that allows you to make money regardless of which way the stock moves. If the stock is rising, we profit. If it's falling, we still make money. But we'll come back to that a little later. Let's start from the beginning. Supermicrocomputer Company is involved in supplying modern equipment, including servers, and is closely linked to artificial intelligence. It has seen a growth of 300% in the past few months. This is a very significant growth. Additionally, this company has been included in the SP 500 index. At the moment, the price has stabilized, meaning the stock has been consolidating in a sideways pattern for almost 2 months. Let's look at the volatilities. What's happening here? Volatility remains at elevated levels, ranging from 70% to 90%. Undoubtedly, for a stock in the SP 500 index, this is quite high. I believe over time, volatility will decrease. Let's also take a look at the volatility smile. As we can see, volatility is skewed. It increases towards the downside, but it doesn't increase towards the upside. In other words, volatility towards upward movement remains at the same level. This indicates that investors aren't particularly betting on the stock to rise. Volatility doesn't increase there. And towards the downside, this is a typical situation where volatility increases because traders and investors buy protective put options to hedge their risks. Due to this, put options become more expensive than call options. Now let's look at the implied and historical volatilities. Currently, historical volatility is represented by the gray line, while implied volatility is the white line. I want to draw your attention to the fact that the gray line representing historical volatility is much higher than implied volatility, indicating that the current volatility levels are elevated. Usually remember that volatility tends to revert to its normal historical values. However, in this situation, I speculate that the opposite might occur, meaning volatility will start to decrease and gradually historical volatility will also decrease. This is because after inclusion in the SP 500 index, stocks usually behave more steadily, which I also want to emphasize. Let's take a look at options trading volume, a crucial point. We have a very large volume concentrated at specific levels. Concerning put options, there's a large volume concentrated around $900 and $930. In reality, the stock is in consolidation, meaning there's a huge volume wall, making it very difficult to break through both above $1,000 and below $900. We dipped to $900 for one day and struggled. What are we facing from this level? Because we have a very large wall, also thousands of dollars. Yes, there were some attempts, but mostly at the end of the day, our closing was below $1,000. I also want to draw your attention to the fact that a very large volume is concentrated this week. Undoubtedly, options will be rolled over to the next week, even to the following week, but I want to say that options cost money, therefore the premium burns, and sooner or later, when the money runs out, I assume the stock may start to correct. Again, I want to touch on delta neutral hedging and market makers, reminding that market makers engage in selling call options, as well as put options, and when they sell call options, they must hedge their sold call by buying shares. They buy shares equal to delta. This is a dynamic strategy, and therefore the more call options are bought, the more market makers have to buy options and gamma squeeze occurs, meaning the price moves very quickly upwards. It keeps moving until a large player sells there, and as we can see, at the moment, market makers are making money including unsold premiums, meaning market makers have collected a premium, and all this premium remains with them. Therefore, when the money runs out, the market maker will have to sell. Also, I want to show you the 3D volatility here. We have concentrated all the information about options expiration date strikes. Professionals will immediately understand how to build a strategy here, but I'll switch to the strategy itself for now. The strategy can be divided like this, as we can see. If the stock rises to $10,000 and stays there, we'll earn $20,000. If the stock goes down to $700, $500, we'll also earn on that. I want to say that we earn with any price movement. This is how professionals build strategies. It's called intelligent strategy and position management. However, I by no means recommend opening this position because the position and strategy are very complex. They need to be managed. You need to know when to buy options, sell options. If you just open these positions without proper management, you'll definitely lose money. Let's return to the stock itself. I remind you of the philosophy that I can't predict price movements. I don't know where the stock will go. My main goal task is intelligent portfolio and strategy management. But again, in my personal view, buying stocks at the moment is not the best idea because in terms of risk and return, it's not on the side of the investor. Some trade on fundamental indicators, some trade on technical indicators. I prefer mathematical position and capital management. It's not that it's impossible for the stock to start rising, it can rise. I'm talking about the relationship and the mathematics of probability theory. If you align probability theory with yourself, you'll always make money. I guarantee you that. I also conducted a poll on where this stock would go after being included in the SP 500 index. The options were whether the stock would fall to $500 or rise to $1,500. However, those who said we would consolidate around $1,000 were right, and that's what happened. I will also launch a new poll for the next month. Let's see what everyone thinks about it. I want to remind you that I'm planning to open a new portfolio from scratch. After YouTube monetization is granted, I will redirect all the money to replenish this account. I will be completely open, explaining in detail how I buy stocks and what strategies I use. I won't hide anything. We will invest from scratch together so we don't miss the start of this experiment. Make sure to subscribe to the channel. Let's get back to the supermicrocomputer stock. We will soon have a report and we'll definitely see what profit and revenue this company will show. In my opinion, the risk-to-reward ratio is not in the investor's favor. I also advise you to watch my previous video where I detailed my strategy and how I see the situation. Good luck to everyone.